His title is The Billionaire Secret to Invest in Real Estate with Crypto. So let's give Brett a hand as he comes up here and shares.
Yeah. Okay. All right. Hey, everybody. How's it going? Here we go. So we're going to be covering quite a bit today. Michael Flight, thank you so much for the honor to be here and to be able to speak. I so appreciate everyone in this room. And I'm here to talk about something that I'm very passionate about, which is tax flow. How many of you know that it's not just about cash flow, it's about tax flow? And how many of you know that there's times when cryptocurrency is at its high and sometimes it's low, and it can be pretty quickly, rapidly changing in any given market. We've seen that here in the last few months. And so this is called the Billionaire Secret to exiting crypto, really, and getting into real estate. But here it is, all tax deferred or capital gains tax deferred. It's kind of like a 1031 exchange from crypto into real estate. How many curious about learning about how to do that? Now, it's not a 1031 exchange. Obviously, 1031 exchanges only work for investment real estate. That's part of why it's like Blockbuster and not like Netflix. Netflix has more flexibility, more opportunity to do different things that an old Blockbuster model did not have, and things have changed. And so here we go. Legal disclaimer, by the way, I'm not a CPA nor tax attorney, although I think I work with one of the brightest, I call him the Elon Musk of tax. He's brilliant. He created the structure 26 years ago, and I've had the privilege to study underneath him for about 10,000 hours. But I am a humble commercial real estate broker who learned about a 1031 exchange, who learned about this structure I'm about to share with you right now. But we strongly encourage everyone to seek independent tax and legal advice and or hire our gentleman who can represent you to help you with these types of strategies. So who saw the movie Meet Joe Black? Anyone see the movie? Remember this movie? And in fact, this is the scene where Death, Mr. Brad Pitt, and they're talking about taxes, and then what the scene goes, basically there's death and taxes. Right? Those are the two things that are pretty certain in life. And we want to be able to use strategies to create and preserve more wealth for clients in a changing time period. And this is exactly what this presentation is about. So by the way, who is this secret for? It's for anybody, you or your investors or your clients, that have net proceeds on a sale of an asset of $1 million and at least a $1 million gain. Okay, so it's about a $1 million net proceeds, $1 million gain, and it can work for just about anything you can think of. Cryptocurrencies, NFTs, businesses, investment real estate. It can save a failed 1031 exchange, even past your 45-day identification period. It also works for GP and LP interest. Primary homes, private stock, public stock, carried interest, captive insurance, artwork, collectibles, anything you can think of, okay, that has a $1 million gain, $1 million net proceed. By the way, what is the Billionaire Secret? We'll get the secret out right now. It's called a deferred sales trust. A deferred sales trust. How many of you have heard of a deferred sales trust before? Raise your hand. About maybe 15%, 20% of the room. Okay. By the way, not to be confused with the Delaware Statutory Trust. These are both DSTs. That's the most common misconception we have at Capital Gains Tax Solutions. Someone will say, oh yeah, I know a DST. What they're referring to is a Delaware Statutory Trust, which is part of the Blockbuster family of 1031 exchanges. They have their pros and cons for those for sure. But remember, 1031s only apply for what? Investment real estate. It doesn't apply for cryptocurrency, which is what we're focused on today. As a part of the deferred sales trust, one of the secrets that billionaires are learning about is the tax flow game on a new level. And this tax flow is not only capital gains tax deferral, but it's also eliminated estate tax. How many of you realize that the stepped up basis does not apply to estate tax? In fact, we've been taught 1031, swap until you drop, and then you get what's called a stepped up basis. Well, what happens if you're above 24 million married or 12 million single? Well, the government's biggest mousetrap is this estate tax. They're going to count your estate, and they're going to say 40% is due upon your death within 6 months. So let's do an example. You're worth 52 million, hypothetically, and all 52 million is inside of a cryptocurrency or a real estate or business. Upon your death, yes, you would get a stepped up basis to 52 million, but your total estate is 52 million inside your taxable estate, minus the 24 million if you're married. Let's call that about 30 or so. You're looking at about a $12 million estate tax, okay? And so part of this is looking at advanced tax planning to help clients who want to exit. And when you do that, you can unlock capital to go into your deals. You can unlock capital to start new business ventures, new tech companies. In fact, one of the best deals we have is for a Bitcoin client of ours. She worked for Google. And she worked for Google for many years, and she had a dream of starting a tech company with her college roommate. And while she was building Google's dream, she learned about something called Bitcoin. And she became an early adopter and invested heavily into Bitcoin, about $50,000 worth of US dollars, and it went to $50 million. She never sold a single dollar until she contacted us and said, Brett, if you're telling me if this is true, we can exit this Bitcoin, and I can use the funds all tax deferred to buy a business or start a business. Where do I sign up? Right? We took about a 30-day due diligence, but within one day, when Bitcoin was at $54,000 a coin, she pushed the button and it moved to the deferred sales trust, and within a week, she had funded her new business venture, all tax deferred. She lived in California, so California is pretty heavy. In fact, the tax is a big tax. The tax is somewhere between California about 33 to 50%, depending on the depreciation recapture, and depending on if it's in real estate assets. Well, cryptocurrencies can't be depreciable, so she was looking at about a 37% tax on her gain. Okay, so she was able to exit $5 million at $54,000 a coin. The problem was, she didn't exit at $68,000 a coin. Now we can never time this exactly, right? But I did try to encourage her to exit more, and the part of that is to be able to dollar cost average and diversify, and gain some liquidity on some different assets. And so the deferred sales trust does a few things, and I've been using this analogy, Blockbuster versus Netflix, because I think it's really important. How many of you remember going to a Blockbuster on a Friday night? You wanted to get that movie, and it's behind that cardboard box, and you've got a chance to get it, right? And you're on a mission. And if you get that movie, you've succeeded, but someone who's 2 steps ahead of you grabs that movie, right? And you're like, shoot. But even if you got the movie, you have to drive home, you have to rewind it, you have to return it within 3 days, right? And then something came around called Netflix, and it changed everything. Well, that's kind of like the 1031 exchange and a lot of other tax deferral strategies. They're very restrictive, right? 45 days to identify, 180 days to close. It creates what's called the shotgun wedding effect, where you're selling high and buying higher 180 days later. And it doesn't even work for other asset types such as primary homes or businesses or cryptocurrency. And so comes along the deferred sales trust, and the reason why you want to consider using it, because not only is it going to defer the capital gains tax, right, but it's also going to give you flexibility. There's no timing restrictions, okay? We call this optimal timing at Capital Gains Tax Solutions. Our parents taught us to sell high and buy low, not sell high and buy higher 180 days later. In fact, they taught us to sell high, and my vision for Capital Gains Tax Solutions and the Deferred Sales Trust is to sell cryptocurrency high and buy real estate when it makes sense, or diversify into stocks, bonds, and mutual funds when it makes sense, right? And dollar cost average and have liquidity and diversification, but there's that big tax chasm that's in between the vision of what your client wants or maybe what you want and where you're trying to go. And so, it can also save a failed 1031. How many of you would like to have a backup plan in case your 1031 fails, even past your 45-day identification period? Well, the Deferred Sales Trust can do this. You do not have to identify it. You just have to know about it, and your exchange accommodator has to know about it. By the way, most exchange accommodators don't want you to know about it. They want to keep you in the Blockbuster 1031. But we work with some of the best exchange accommodators who will allow this into the exchange documents. Most commercial real estate brokers, by the way, don't want you to know about it. I'm a commercial real estate broker myself, and I love 1031 exchanges when the deals make sense. But realize that it's just like we're here right now. It's kind of cutting edge for people to think of something beyond what the 1031 has been and look at something new. What else? Raise millions instead of thousands. How many of you would like to have clients or investors exit out of an asset type, defer the tax, and to add value before they even show up to you, right? In other words, we talk about IRRs and cash flows of 6 to 8% and maybe a 13 to 15% IRR over a 5-year period of time. Well, what if before they even show up with the cash, you've already helped them by introducing them to a strategy or introducing them to something where their tax is deferred by 25 to 50% of their gain, right? How much does that go along for them? And then also upon the exit, how can that help them out? And so we're going to continue to go. And in fact, this was the day, who saw the Roger Bannister in Oxford, England? Hear this story? I think it's 1954 when he runs the sub 4 minute mile. Anyone see this story, right? Where they said it was impossible to do, right? So we feel like we had a similar moment on August 17, 2021. In fact, the Deferred Sales Trust goes back thousands of closes, billions under management, 26-year track record, over 24 no change IRS audits, but they had never been done a cryptocurrency deal. And it was difficult because part of it was the crypto was going high and low and people needed us at certain times. Well, the first one was done for a client of mine named Peter, and Peter worked for a company called Ripple, and he became an early adopter of Ethereum and Bitcoin, but mostly Ethereum. And the story goes that his wife, on one of their anniversary dates, he's like, honey, I got some news to tell you. And she's like all scared. He goes, what's going on? Well, I bought a thing called Ethereum. What's Ethereum? Well, it's a cryptocurrency. Well, so what? Well, the value is now $6 million, and this is right around 2017, 18. And she said, okay, let's sell it all. He goes, no, there's a future for this. There's a future. And she says, what do you mean? That sounds like the craziest thing I've ever heard of. He goes, no, I understand it. There's a future for it. So they settled on a compromise. We'll sell half. However, we need to find a strategy where we can defer the tax. So that began the journey to try to find it. Well, what happened around that time? Cryptocurrency tanked, right? And so they went through a cycle of ups and downs between about a $100,000 investment that went to $13.5 million, but it would go up and down along the period of time. And then they met us, and then I was driving to Walnut Creek. I live in Sacramento, California, and he calls me on a Saturday morning. He says, Brett, it's time. Ethereum has hit $3,000 overnight, and I'm ready to trade $5 million. Can we do it? And so part of how we set this thing up, we have the launch codes on my phone for the Kraken accounts, and I'll walk through how this has worked. But it was like a movie. He's like, what are the codes? Are you by a Starbucks? Like, well, I don't want to go on a Wi-Fi that's unsecured and all of these things. So I'm going to give him the codes over the phone. And over the next hour, he transferred $5 million outside of his one of his places. I think he was at Coinbase at the time. And he went into the Kraken account, and we deferred about $1.85 million of tax. And so that became our rallying cry for the cryptocurrency world to try to help them escape feeling trapped by capital gains tax. And that is the Ethereum deal. And by the way, what's possible for you? I'll talk about the real estate people out here because that's important as well. This is a client of mine named Shay Pope, and he had a dream of developing multifamily properties, and he owned a business that he was selling. He had zero basis. In fact, the business was called Logo Brands. He would do branding for college campuses for companies and sporting teams and such. And so he built this thing up, but he had a huge tax, but he wanted to do syndication and development of multifamily in Tennessee. So he sold his $2.6 million business, deferred all the tax. And again, this is not like-kind replacement, right? Because you can't trade a business into commercial real estate, and let alone something that's of little value at the time where you're going to develop. And he deferred all the tax, okay? And he was also able to invest some of the funds through the Deferred Sales Trust with Praxis Capital and Brian Burke, if you've heard of him, and also Lane Keoko in a passive multifamily deal. And these are a few other clients of mine too. We've done over $100 million in sales with them. In fact, they've done 5 Deferred Sales Trusts with us. It's actually one trust, multiple promissory notes. And you can hear David on the left. He tells this entire story. He's an attorney too, really smart, asks a lot of good questions of us. And then we went on to do 2 other sales of Bitcoin and Ethereum. We've only closed about $12.5 million before the market took a tank here. But that was these are 2 other deals that we've done as well. So here's another one we did. We saved a failed 1031 exchange. This is a $7.6 million sale, $1.1 million in tax deferred. And here's a primary home sale in Palo Alto off of University Avenue. It works for primary homes. Here's a multifamily sale. We eliminate the estate tax in Colorado for a client. And here's some other recent sales. We just did a $29 million deal here in Austin, Texas, $15 million deal in Taylor, Texas, $12 million deal in San Diego, and it goes on, the list goes on. But I want to show you how to do all this. Hopefully you guys get the idea that these are happening and this is real. Step 1 is just to map out a plan. And so whether for yourself or for your clients, hopefully you're sitting down and finding out what does it mean for them to be able to invest with you? What does it mean to them to be able to exit a business or cryptocurrency and be able to have cash flow and diversification and liquidity? What does it mean for them to be able to retire? Like a client of mine, we just did a $2.5 million sale. Their NOI was $120,000. With the Deferred Sales Trust, they're going to increase their cash flow by 60%. Plus, they owned real estate in California. And if you guys have ever owned real estate in California, it's not easy these days. And so they were able to exit this asset at a good price where interest rates are still pretty low and increase their cash flow by 60%. But we really clarified what their vision was for their wealth and their time and their energy. They had kids a little bit later in life, and they have twin daughters about 9 and 10, and really they just didn't want as much stress anymore. But they're also very entrepreneurial. They want the option to be able to go back into real estate should they want to, which is what the Deferred Sales Trust allows you to do. So how does this whole thing work? First thing is you set up an account with the Deferred Sales Trust. You can make up a name. We could call it the Blockchain DST 2022. It's a single entity trust that only does business with you. And if you're married, your spouse, okay? It's never commingled to other accounts. And we simply open up a Kraken exchange account. Now I say simply because it took us about 90 days to get the first one open with the KYCs and who we are, they were very concerned, and as they should be. They were very organized and we love them, and they've opened up dozens of accounts now for us. And so that's step one, is open up the DST and then open up the Kraken account. Step 3 is just simply to do a sample transfer. We did a first transfer of $25 on Ethereum before we did 5 million to make sure all the wallets are connected. And from there, we're going to transfer the coin. We're not going to sell the coin anywhere. We're also not going to transfer the coin to another coin. In fact, my client Peter transferred 5 million of Ethereum value to the Kraken account. Okay. Now immediately we turn around and we sell that to cash. And so what happens is the trust receives the cash. And since the trust bought and sold for 5 million, it's a new basis. And since Peter hasn't received any cash, he receives a promissory note. In fact, this is how this whole structure works. We're going to show that. He's in a deferral state, also known as like a seller carryback. Okay. And from there, we're going to invest the funds. And you can kind of pick your road. Do you want to be active or passive, or a little bit of both? This particular client decided to be passive. In fact, he wants to eventually do a cryptocurrency company opening up. But right now, his main thought was just to put it into the biggest companies in the world, diversify a little bit. By the way, he's also extra happy because Celsius crashed, obviously, right? And 30% of his holdings of 13.5 million would have been in Celsius. In fact, he's still losing maybe a couple million because he didn't exit all 13.5. And he's really happy that we were able to get it outside of the crypto world into a U.S. bank account, all tax deferred, and then into stocks, bonds, and mutual funds where it's a little more conservative there. So, by the way, where can the funds be invested into? Real estate syndications for your GPs out there. I do believe that everyone needs a strategy that's going to attract and unlock capital in a transformational way, right? And so if you can help clients, help passive investors be introduced to something like this, they have an extra, again, 30 to 50% of their gain that can now be rolled into your deal. And I say rolled, it's actually invested as a passive investor. If you're curious how that works, the trust itself is its own entity, like a regular LP entity, okay? It doesn't have to be a carve-out. We don't have to do any tenant in commons because we're not doing a Blockbuster 1031. We're doing a Netflix deferred sales trust. It can also be put, again, stocks, bonds, mutual funds. You can be into active real estate deals. You can do your own deals with the trust. The trust can be a joint venture partner with you, which is pretty cool. It can also go back into cryptocurrency. Business ventures, you can also lend the funds. But the big thing here is you have diversification, liquidity, and optimal timing to do deals when it makes sense for you. All right, step 4 is just to enjoy your wealth, give more, invest more, start a new business venture, and maybe invest, again, with one of their partners. What are these promissory notes? They're typically 10-year notes, okay? And you can renew them every 10 years for 10 years, and there's about 8% earnings, typically net of the fees. You can always cash out and pay your tax as well. And then again, you can move your funds outside your taxable estate without having to give it away to charity, without having to buy a bunch of life insurance. So I'm going to call it Bronson Hill right now. We're going to do a quick little interaction here. And Bronson's going to be my Bitcoin billionaire. Bronson, welcome Bronson to the stage. All right, so Bronson is really happy. He's smiling. He doesn't have his green scarf on, but he's feeling good because he's a Bitcoin billionaire, and he's looking at this deferred sales trust for the first time, and he's trying to figure this thing out, right? And Bronson, are you live on charge?
I'm live.
Okay.
Yes, I feel wealthier just being up here.
Okay, and Bronson, what would it mean if you could invest into real estate with $1 billion when Bitcoin's at $68,000 a coin and not have to suffer the $19,000 or $15,000 crash?
I would love that.
Okay, so you learn about it, and you have these assets to sell, and so what we're going to do is we're going to set up the trust. Bronson, what do you want to call the trust?
The Bronson Trust.
Beautiful, Bronson Trust. You're going to set up, it's going to be right here in the middle, okay? And gentlemen, your name? John. John's going to, he's the $1 billion buyer. He's ready to buy it for $1 billion, okay?
He looks like a $1 billion buyer.
Yeah, he's ready to go, right? He's Bitcoin all the way. He's a Bitcoin bro. He's like, let's go, okay? So he's selling it to Bronson, right? Or Bronson's going to sell it to him. Now, Bronson, technically, if this is a real estate asset, and you could probably still do it with crypto too, you could loan the $1 billion to Josh. John. Okay, to John. Josh, he's a billionaire, it doesn't really matter, right? But you can loan the money to him, right? Or the trust could jump in right in between, right, and say, you know what, Bronson, I'm going to buy it for $1 billion and give you a promissory note and turn around and sell it for $1 billion. So he's going to get the Bitcoin, he's gone. You're left with a promissory note. You haven't taken any constructive receipts. So if you've taken $0 at closing, how much tax is triggered today?
0.
You got it. And if the trust bought it for $1 billion and sold it for $1 billion, does the trust have any gain, or is it the same? It's the same. So that's exactly what's happening there, right? So we have this trust in the middle. We have Bronson up top, and he has the assets to sell. But instead of going directly to the cash buyer, he's going to carry back for this trust, okay? And that's the magic of this. It's just IRC 453. Let's give Bronson a hand. 5 minutes, okay, good. So the number one secret to overcoming the biggest objection to the deferred sales trust, right? And by the way, that's just a quick version of the how-to, but this is probably what you're thinking. Brent, oh my gosh, this sounds amazing, but I need my trusted advisor to say yes. I just don't understand how my CPA hasn't told me about this. Like, I thought I was the, maybe you're a billionaire. I thought I was the 100 millionaire or the 10 millionaire or whatever, right? Like, this isn't, I don't know about this. And I just want to tell you one deal story, and hopefully it's going to give you some confidence, some credibility, even if you have zero deferred sales trust knowledge or tax deferral experience. And this is the story. This is a guy named David Young. Does anyone know David Young or heard of David Young? No. Okay. Did anyone know a guy named Bill? Oh, we got one. We got a guy named Bill Gross. Anyone know? I've heard of Bill Gross. Bill Gross. Okay. Bill Gross and David Young, for those that don't know, built up a company called PIMCO with about 4 other guys. Okay. And they built it from $8 billion to $1.2 trillion over a period of time. These guys are world class at what they do. They manage some of the biggest wealth in the entire world. Okay. And you can imagine people are approaching the people like David Young to get their approval for their tax thing, right? And if I can just get David Young to say yes, then we can change our business. So David says, in fact, he did a whole interview with me. I've done multiple interviews with David. I said, David, what was the biggest thing for the deferred sales trust? He goes, Brett, well, let me tell you a story. He goes, we get approached a lot. And he goes, 99% of the time, it doesn't even pass the smell test. Like, we just say no. We're not even going to touch it. And he goes, we're not tax attorneys. We're not CPAs. But we were approached with the deferred sales trust 5 years ago. And we didn't do a 2-day due diligence or a 2-week or 2-month. We did a 2-year due diligence. Their legal team, they flew back and met with the tax attorney, my business partner who created the structure. They went through it in detail, okay? And what did he say? He said, you know what, Brett? We're all in. We think that tax attorney is the smartest person we've ever met. And number 2, we'll put our name on it. And they became a part of the inner circle. And they'll manage money for clients. And so what I say to all the skeptics, and you should be skeptical, this is something that does sound too good to be true, and it sounds, oh my gosh, I should have already known about it. But if it's good enough for David Young, and let's get a raise of hands here, if it's good enough for David Young, who's kind of like he's kind of like a Mark Cuban, if you will, of the world of financial advising. Right? I know most of us are commercial real estate people and blockchain crypto people, but if it's good enough for David Young and his legal team after 2 years of due diligence, is it good enough for you? Maybe your CPA. Right? And that's what I would, anyone want to raise their hand on this? If it's good enough for David Young and his legal team after 2 years, and you can talk to David, right? We got a couple, that's good. I've accomplished that. And that's what David Young is amazing with. And you can see his whole interview. You can actually watch him and hear him and go through it all. And if you want to learn more, you can go to capitalgainstaxsolutions.com. So if this sounds like you and you want to help yourself or others escape feeling trapped by capital gains tax on the exit of cryptocurrency or other assets and invest into real estate, then again, you can check out my new book that's coming out. You can also check out my YouTube channel. We have a free mastermind every Friday at 10 a.m. Pacific Standard Time, 1 p.m. Eastern, where we're breaking down deal stories or answering questions live. And we go through all of that in detail every single week. And that being said, I'm out of time. So I want to open it up maybe for just a couple questions. And go ahead, sir. Yes, sir. So there's DST 1.0 and 2.0. DST 1.0, you are the creditor. You cannot be the owner of the trust because that's taxable. So our role at Capital Gains Tax Solutions is to be the trustee. Think of it like a qualified intermediary, right? If you send your funds to a QI company, you're not the owner of that QI company. It needs to be third-party unrelated. Then we have a third-party financial advisor, and we use third-party banks, but nothing ever moves without your approval or your signature. And so everything's protected and transparent, if that makes sense. But then you can turn around and you can partner with the trust, form an LLC, where you're the managing member of that LLC, and we call this lendership, where you become the owner of the LLC, but the trust is your silent joint venture partner. And that's the magic of this. You're not just having to give up, I'm just a lender. No, you can become an owner again. Instead of having to get funding from a bunch of different sources, the funding can come from the trust that owed you the money. Okay, and then you can go build investment real estate, you can go buy investment real estate, businesses, and do all that. And DST 2.0, where we eliminate the estate tax, where there's no limitation on the $5 million rule per person per year for tax deferral without getting interest charged. We use a different part of the tax code, which gets it outside the taxable estate. In that scenario, if you have kids, your kids can be the beneficiary, and then we eliminate the estate tax on that side of it. So did that answer your questions? Yeah, okay, great. Yes, sir. Every 10 years for 10 years, you can renew it for 10 years. So the question is, the promissory note, what are the terms? Typically, a lot of our clients are setting up in 10-year terms. You can set up in 5-year terms, 3-year terms. And every 10 years, you can renew for 10 years. And you can live off the interest payments to pay ordinary income tax on that. If you dip into principal, you pay cap gains tax, okay? But then your kids can step into your shoes via living trust. But keep getting your question there. Exactly. There's a balloon payment that comes due. Now you're going to pay capital gains tax in that given year, given your tax bracket. But we also have clients that move to Florida or Nevada and they live off the income of the trust and they establish a new place there. We call that tax flow planning, which is pretty cool. But the cap gains tax will always follow with the state you came from. Any other last questions here? Yeah, one there, back there. Yeah, it's yes. So let's say there's 10 million in your trust. Immediately we have to keep some liquidity for the trust, but the majority of it can go into a new asset. And exactly right. You can continue to build assets there, and then when you go to sell that asset, you pay the trust back, but it owes you the money anyways, right? And so the answer is yes. We have a very, very high retention. Most of the clients are probably going to pay the tax. I don't want to pay the tax immediately. They're going to want to keep renewing the note. So it's very flexible. Great question. The question is, does the trust owe taxes? Here's the cool part. The trust itself typically operates at a loss. It's a business trust, like a C Corp, and it has expenses, but it can also accrue the interest that it owes you. So in any given year, even though it's earning, it typically has a side because even if it hasn't paid you the interest out yet right away. So 99% of the time our trusts are operating at a loss in any given year. So it's a non-issue. Does that answer the question? Okay, good. We got another one right here. We could go offline, everybody. So hey, I want to thank you. You can go to capitalgainstaxsolutions.com to learn more. Thank you so much, Michael Flight, again for having me.